Hi everyone. So today we are going to take a question on contract costing. Okay, so generally for exam with respect to contract costing, you will be asked to prepare a contract account and calculate what is the notional profit and what is the profit that will be charged to your P&L account. One important aspect in contract costing is escalation clause. Okay, so contracts generally contracts we will have repairs contract, we have construction contracts. So what is the most important feature of contracts? Contracts are loaded with material and wages, right? Their material and labor are the most important and the major part of cost in a contract. And contracts are usually they range from 1 month, 2 month. They can be short term, medium term, long term contracts. So when you have a medium to long term contract, your material and labor cost is subject to continuous revision. Material cost will change from time to time. But when we finalize on a contract as on today, the price that we are finalizing will be based on the material and labor cost as on today, with maybe a small marginal percentage that we will be adding to cover up any kind of increase in the cost in future. So when the cost goes beyond, suddenly there is an increase in your material cost, and then how you will be able to cover that increase in material cost? You will end up in loss because the price is fixed as on today, and suddenly there is a sudden shoot up in the material cost. So in order to cover this, most of the contracts will have an escalation clause. An escalation clause states that if assuming the contract price is 100, okay, the contract price of 100 rupees is fixed based on a material and labor cost as on today being 25 rupees. Okay. So our escalation clause will contain a condition that if my material cost goes beyond 5% of the cost as on today, then whatever increase is there beyond that 5%, you will have to revise my contract price accordingly. We cannot go and revise the contract price every time, so we revise it through this escalation clause. So if my material cost becomes from 25, it goes to 30. Okay, and my escalation clause contains a condition that if the price of material increase beyond 5%, then the contract price will also be revised accordingly. So up to 5%, which is 25 rupees, 5% of 25 rupees. Up to 1.25 rupees, I am absorbing the increase in the cost myself. But beyond 1.5 rupees, if the cost increases, then I have to collect it from my client or from my customer, okay, to whom I am providing this service. So the net increase, if you see here, it is 5 rupees. Up to 1.5, I will bear the additional, whatever is the excess cost. Beyond 1.5, that is this additional 3.75 rupees of increase in the cost, based on escalation cost clause, a certain percentage will get added to my contract price. Okay, if I'm saying if the increase goes beyond 5%, for whatever increase is there beyond 5%, 25% of that price will get added to my contract price. So in that case, 25% of this 3.5, that is 9.38, will get added to my contract price. So my contract price will get revised from 100 to 0.938, that is 100.9. Okay, we'll see one proper question, an exam centric question on this escalation clause. I'll see how to prepare a contract account also. So this question begins with a contract price being given. The contract price is 5 lakh. Okay, we have material, wages, all the details that is required to prepare a contract account. And then we come to the most important part, which is the escalation clause. In the event the price of material and the rate of wages increase by more than 5%. Okay, so if my price of material and wages go beyond 5%, contract price would be increased accordingly by 25% of the rise in the cost beyond 5%. Okay, so whatever is the increase in the price beyond 5%, on that increased 25% we have to calculate, and that will be added to my contract price. Okay, it is found that since signing of the agreement, the price of material and wages increased by 25%. Okay, and the value of work certified does not take this into account. So my material and wages that is given in the question is the increased material and wages cost, and the increase is by 25%. So the 1 lakh that is given here minus there is a material in hand of 25,000. So what is material consumed? Material consumed is 1 lakh, which is the material purchased, minus 25,000 material on hand. So material consumed is 75,000. This 75,000 is 125%. So what is the increase in the material cost? Increase in material cost is 75,000 into 25 by 125. Next, wages. Wages, 125% is, there is the 45,000, okay, plus 5,000 rupees accrued. Accrued means it is due. It is due for payment. They have not yet paid it. Okay, so that will get added in your total wages. So total wages is 50,000. So what is the net increase in wages? Net increase in wages is 50,000 is including the 25% increase. So 25 by 125, which is 10,000. So what is the net increase in cost? Is 10,000 plus this is the increase in cost. So 5% of increase in cost, there will be no change in the contract price. So what is this increase in cost? This increase in cost is for how many percentage? 25%. So what is the 5% here into 5 by 25? 5,000. So up to 5,000, there is no impact on our contract price. Above 5,000, whatever is the increase, which is increase in cost above 5%, which is this 20,000, 25%. What does the question say? The price would be increased accordingly by 25% of the increase in cost beyond 5%. So 5% of increase in cost is 5,000 rupees. Okay. So what is beyond 5% increase in cost? It's 25% is 25,000. 5% is 5,000. So the net increase is 20,000. On 20,000, 25% will get added to my cost. This is the increase in contract price through escalation clause. Okay, so this is what we have to find out. So first what we did, we started with finding what is the net increase, the total increase in the cost, that is this 25% that we have found out. And then up to 5% of the increase, there is no change in the contract price. So that we have to reduce. So from 25%, we reduce that 5%. So what is the net total increase on which the escalation clause will apply? It will apply on the 20% increase in cost, which is 20,000 rupees. On that, 25% of this 20,000 will get added to my contract price, not the entire increase. Okay, not the entire increase in cost gets absorbed in the contract price. Only a percentage of the increase in the cost gets absorbed into your contract price by way of a revision through escalation clause. So once we identify this value, then preparing a contract account is very simple. We'll go ahead and prepare a contract account now. Material, 1 lakh. Okay. Wages, 50,000. I'm just adding the total wages. Wages paid plus wages accrued. General expenses, 10,000. Then material on hand, 25,000. Work certified is 2 lakh. Depreciation is given. Depreciation on plant, 5,000. Work uncertified, which is 15,000. And last here we will have our escalation. As per escalation clause, what is the increase in contract price? Which is 5,000 rupees that we found out. So your notional profit is difference between debit and credit, 80,000. Okay, the 80,000 you will be bringing it forward. Okay. Now to P&L account. Here, not even 50% of the contract is completed if you see the percentage completion. So we will be transferring 1/3 of our notional profit. So 1/3, 1/3 into 80,000 into cash received by work certified. 1,50,000 by 2 lakh. 20,000. So the balance will go into your WIP account. So in WIP account, balance 60,000 will go. Here, so P&L account, how we calculated? We have just applied the formula. Formula for calculating the amount that will be transferred to P&L account, which is 1/3 of the notional profit in proportion of cash received by work certified, which is 1.5 by 2 lakh. 1.5 lakh by 2 lakh. So the most important part of this question is the escalation clause. If you crack the escalation clause and find out the value correctly, then preparing a contract account is just a matter of seconds. So thank you so much for watching the video. I hope this video was insightful for you to understand the concept of contract costing and the most important part of contract costing, which is the escalation clause. Thank you so much.